What's going on, people? I'm back with another video for you guys today. It's going to be something different this time. Today we're going to be talking about technical analysis. So this is going to be a basic intro video specifically for those of you who don't really know how to use technical analysis with your trading and also long-term investing. And the reason I'm doing this is because I started out as a fundamental trader, so I used to look at the news, look at different websites like Yahoo Finance, CNBC, Market Watch, Bloomberg, all those kind of websites, and slowly transitioned into integrating more technical analysis before I ended up becoming mainly a technical analysis trader. But like I said, I just want to help you guys who are not really used to using technical analysis. For those of you who are maybe new to trading, this will help. For those of you who don't really know how to long-term invest or pick long-term investment picks, this will hopefully help you as well. And before I start, I do want to say it'll be great if you can drop a like on the video, drop a thumbs up. Also, subscribe if you're new around here. And right now I'm in the hotel, so I'm making time for you guys making this video before I head out probably to the beach or something, get out and about. But like I said, this video is going to be pretty intro level, pretty basic, more for newbies, more for beginners. And hopefully you guys do understand a lot from it and, just able to take that away. So I'm going to start with support and resistance. So obviously I have the Tesla chart on my screen, and this is the daily chart. Now you see a lot of different lines. Now don't pay attention to those lines just yet, because I'm going to go through a different chart, AMD chart here with different lines. Apple got different lines, different color lines. ExxonMobil, different color lines. Let's just do a couple more. Alibaba, different color lines, different areas. PayPal, same thing again. And I think might as well just do Walmart. Yeah, a couple lines here. So from all the different lines I've shown you in different stocks, there are different prices, different colors. All of those are support and resistance lines. So if I was to bring up a random chart, let's go with Target. And even Target, I've got a line. But the first thing I want to do when I look at any kind of stock, right, is figure out where the support is and where the resistance is. So when I say support, that usually means a line, a level, sometimes it can be a zone where a stock doesn't usually fall below, where price action doesn't usually fall below. So for example, let's say I use this as a level of support, right? I could also use this as a level of support. I could, put both of them here. I could mix it up. But either way, it's key price points where a stock doesn't break below, where the price action of that stock doesn't break below. Now I'm doing it on a daily time frame. Some people would choose to do this on a higher time frame, like the weekly. Some will do it on a lower time frame, the 4 hour, the 1 hour. It depends what you're doing. So when it comes to technical analysis, I like to get an overview by using the weekly chart, see what the price action has been like over the past few weeks. Every candle here represents a week. Then I like to go to the daily time frame because, again, smaller time frames, you can see a clearer picture. Here's a daily time frame, so each candle represents a day's worth of price action. And like I said, depending on what you're trying to do, swing trade, buy leaps, invest long-term, day trade, you're going to go in different time frames. So up here I have the 5-minute chart, the 15-minute chart, the 1 hour chart. Those are what I'll use more likely for my day trades. Then it gets to the 4 hour, the daily, and the weekly. That's more the swing trades. And you might even use the monthly chart if you're looking at leaps, long-term plays, and long-term shares, right? The monthly chart shows you where Target was, a few months back, a year back, 2 years back, etc., etc. So I'm going to start off by picking out a stock that has no levels of support and resistance, so I can show you how I would draw those. Here we go, ServiceNow. So they actually just had earnings. Yeah, they just had earnings, ironically, but we're just going to ignore that for now. So it's actually up $31, but we're going to ignore that for now. So support and resistance, right? When you're drawing your support and your resistance, you want to find a point. First you want to zoom out, and then you want to find points where the stock hits a certain level and either bounces many times to come back up, or rejects and comes back down. So I'm going to start by drawing a few levels of support. And like I said, I'm just picking random stocks, so we're going to go along those random stocks and draw levels of support, right? Here's a level of support. Why is the level of support here? Well, here the stock was bearish, it was trending down, and it bounced on that level, trended higher, right? So it was a strong level of support. The stock did not break below that level. Now, if we scroll left a second, you'll see that previously the stock was actually below that price point. And when the stock came from below to, upwards and hit that level, it actually rejected and sold off. The reason being, you can have a level of resistance where a stock fails to break above. And in the future, when the stock finally does break above, as it did here, it can come back to that level and now form a new level of support. Meaning, previous levels of resistance can become new levels of support. That's exactly what happened here with ServiceNow. Okay, so that's a level of support, which was previously resistance. Now we're going to draw a couple lines of resistance. I'm going to start right here. And you can use the body or the wick, And by the way, I don't want to sidetrack, but if you're not completely understanding what a body is and what a wick, I'll give you a good example here. We'll zoom all the way in on these daily time frame, these daily candles. So we have two candles here. We have a red one and this green one. I'm focusing on these two, right? The one from Thursday, 16th of October, the one from 17th of October. So here you see a green candle. That means with the daily price action, the stock price opened right here. The stock price closed right here. This is the lower wick. The lower wick is where the price action went intraday, and this right here is the upper wick where the price action went, to the highs intraday. On the other hand, here you have where the stock opened. Here you have where it closed. That's the body. Here you have the lows it reached during the day, and here on that wick you have the highs during the day. Right? That's the highest it went to during the day, but it still ended up closing lower than where it opened. Right? The red candles, the open is up here, the close is down here. Green candles, the open is here, the close is up here. Right? With green candles, you end the day higher than you started. With red candles, you finish the day lower than where you started. Okay, so that's just a bit about candles, just before I get back into the support and resistance. So let's zoom back out. Let's look at why I picked this level as a level of resistance. So the level here is $965.96. ServiceNow ran from 850 all the way up to 965 on this date here, and it sold off. It then came back to that level and sold off again. Now, we've been selling off, and with the overnight jump, we might reach that level again and sell off. If that does happen, then you can see this as a very strong level of resistance drawn on the daily time frame. Don't forget, as you go to lower time frames, you can also have levels of support and resistance drawn there. I'm on the 4-hour chart, right? But I could equally do this on the 1-hour chart. So I have extended hours on, which means it's counting the aftermarket and the pre-market sessions. I'm going to remove that right now. Okay, cool. So yeah, like I said, if you go on the 4-hour, the 1-hour time frames, you can draw multiple levels of support and resistance at different areas, right? This right here is a bit of consolidation. You can, if you want to, you can draw this as a level of resistance, right? Right here. You can draw this as a level of resistance because we came up to this level many times. We didn't break above until we finally did break above and we flew, right? It's up to you how you draw these lines, right? I showed you guys the different charts that I have, and you can have support and resistance at many different places, right? Tesla here got rejected at this level, not once, twice, right? Back to back times it got rejected at that level. On the other hand, when Tesla came down, when it finally broke the level, came down, it almost bounced around that level and continued higher, right? So it's just up to you how you draw these lines. And the most important thing is you scroll out, you zoom out, scroll left, see what, where these levels have been historically and how strong those levels are, right? If there's certain levels that a stock continues to bounce at, like here or here, then it's a strong level of support. Now, if you want to trade calls, puts based off support and resistance, you can definitely do that, right? That's a great idea. But you also have to remember that these are our own drawn levels. So if Tesla wants, right, it can come down to this level and go straight through it. It's not just because I've drawn this level that it's going to stick to that level, right? It can come down to this level and go straight through it. It can also go up to a level and go straight through it. These lines are drawn by myself based off historical price action. So you should never be too worried about, what exactly the stock is doing, if you're right, if you're wrong, if your line is good or not. It's just having different levels. I'm putting up IWM now. So IWM was a trade we took today. If you're in the Discord, you took this with us. I also actually gave it out on Twitter for free, and I've seen a few people who took 100%, 110% on that, so that's great. But if you have a 5-minute chart, so I have a 5-minute chart right here, right? You can draw simple levels of support and resistance all along the way, and pick out different levels where IWM bounces or IWM doesn't fall or doesn't break above or whatever it may be, right? So this level here, I have IWM, the white line. I'm going to show you why this is a level of resistance right here. level of resistance right here. And then if we scroll to the right, this is from last week, Wednesday. If we scroll to the right, guess what? At the same level that I drew from the day before, it actually bounced at that level, right? And then if you scroll right again, all the way to this week, you'll see we haven't touched this level until today, where we came very close to this level, but not quite hit it, right? With FOMC, Jerome Powell speaking, we almost came down to that level. So technically, the price action, one could say it bounced on my level of support. Someone could say that, right? Others might be a bit, more technical and say, oh, it didn't come to the level of support. It, whipped off the level of support. That's also true. But either way, the idea here is you have those strong levels and you can play those levels, right? I can take calls up to 248.55, which is my level of resistance, previous support. I can take puts down to this level, right? In the Discord, if you were with us when we live trade, I said, oh, my next level, because we broke my previous level, my next level to the downside for IWM was going to be 244.54, right? In the morning, we played calls, right? We played calls really well off the bounce of support. We played calls to the upside, ended up with 160% returns, right? On other days, we might, trend along this line a lot more before we take off. But because we were consolidating on this line, bouncing on this line, I was pretty confident in my calls. And that's why I told people, yeah, I'm staying in. Feel free to stay in as well. So that's support and resistance as a beginner. Now let's talk about the trend, because a lot of people don't know if they should be trading calls or if they should be trading puts or what the case is. So let's talk about the trend, okay? I'm going to pick a random stock. What stock can I pick? I'm going to go with, how about Amazon? Right, they had the AWS outage last week. Let's go for Amazon. So to find the trend, I go on the higher time frame. I'm going to start with a weekly chart. Here's the weekly chart for Amazon. Okay. So Amazon, last week was green. This week it's green again. So it's pretty bullish. But not just that. If we scroll out a little bit, we can see that since April, May, June, July, a little bit pullback in end of July. But since April, we've been up. So it's pretty bullish, right? It's pretty clearly bullish. So I know when I look at Amazon like this, it's more likely to have call flow. It's more likely to be going to the upside. It's more likely to be, pushing than selling off, than declining, right? And that's just kind of identifying a trend. It's the same thing if you look at Roblox, right? You can see this is the weekly chart again. Over the past few weeks, in fact, I say past few months, it's just been climbing higher and higher. Remember, each candle here represents 1 week. So this trend here is clearly bullish, right? And if you want to get an overall idea of what a stock is, if it's bullish, if it's bearish, if it's this, if it's that, just look at the weekly time frame. You can even look at the monthly time frame, right? I expect to see a lot of green candles. See, green candles into April, a lot of green candles. You can see the overall trend. And if you look at, if you zoom out, you can identify the trend. It's important to identify the trend so you know which direction the stock is going. In this case, the stock is going up, right? Previously, back in January, February, it was selling off, right? There's the blue arrow, it was going down. Now the trend is very clearly bullish. Again, something to just take note of when you're deciding if you want to play calls, if you want to play puts, this or that, okay? And I think a lot of people forget that when it comes to trading, right, you can get an idea of the overall market by looking at the S&P 500, SPY, or if you want SPX, right? Similar things, right? The S&P 500 index, right? And then the SPY is the ETF. It's clear to see that this year, right? From January is back here, right? January's S&P 500 was at 5,900, right? It was even lower before. Now we're at almost 7,000. So you can see that this year we've been bullish, right? You see the stock goes higher and higher. Yes, there are days when it sells off, it gaps down. Yes, there are days when it has horrible news and it sells off. But overall, the trend is very bullish. So we're in a bull market. Again, technical analysis, it comes down to breaking it into support and resistance, identifying the trend. I'm going to touch on the EMAs in a second, just understanding what the candlesticks are doing and just, putting that into practice when you trade the markets. So like I said, I can go and draw support and resistance levels all around. Right here, I can go and draw one right here. Now, why is that? Well, if we zoom in a little bit, before we go to the lower time frames, let's zoom in. SPY got rejected here and sold off. The next time SPY gapped up, maybe some would say it bounced on this line, but we can have a look at the 4-hour chart now. lower time frame. Okay, there was no bounce on that line. It just gapped up way, way above. There you go. It didn't even touch that line. But yeah, here, we can pull it down a little bit. Right here, there we go. So now you can see clear levels of resistance, right? We hit this level. If you scroll back, even look, here we go. See? So remember, I drew a level based off here. If we scroll left, as I told you, always scroll left. On the hourly chart now, you can see we hit this level. How many times did we hit this level, right? How many times did we touch this point, this price point? 1 here, 2 again, rejected again, 3 here. You can say 4 number here, 5 right here. Excuse my, writing. I forgot my mouse at home. I didn't bring my mouse to travel with me. And then 6th time again before we finally gapped up and flew. This is exactly what I'm talking about, right? You have to find those price points where the stock price rejects many times. That's a strong, strong, strong level of resistance right there. Okay? And once again, I want you guys to remember, these lines are drawn by ourselves. So we don't have any, algorithm or maybe indicator or something that's going to draw those lines for us. We're drawing it ourselves. But the most important thing is that you identify obvious levels of support, resistance, whatever it may be. You identify those levels and you identify them well. Okay. Next up, I want to talk about EMAs, right? I've got the EMAs on my chart. That's the green line, the orange line, the red line. I've got those lines on my chart and I want to talk about them because they are very important to me. They help me figure out if something's bullish, something's bearish, all that kind of stuff, right? So the EMAs, right? EMA stands for Exponential Moving Average. So the EMAs will give you an indication of what's happened previously. So for example, if I go to the daily chart and I go to SPY, right? SPY. Now, each of these lines, the green line, the orange line, and the red line, first of all, represents previous price action. So the green line here is the 9 EMA, right? So what does that mean? The 9 EMA is, adding up the previous 9 days of price action and then pretty much taking an average of the 9 days, right? So it's telling you where the stock would be, if you take the previous 9 days of price action and you add them up and then, take the average. The orange is the same, but for 21 days, and the red is the same for 50 days. So the 50 and the 200, both of those two are very strong indicators because they take a huge amount of days, right? Red is taking either 50 or 200, depending on what you choose. It's taking a big amount of days and finding the average of that, right? Think of you go to a small town, you try and figure out the average of people that eat, let's say, eat fries, and you take 9 people and find the average that do and that don't. You take 21 people that do and don't, and then you take 200 or 50 people that do and don't. You're going to get a much more solid idea from the 50 or 200, right? You're working with a larger batch of data, larger number. Same with this. The 200 is a larger batch of days. So the 50 is a larger batch of days than the 9 and then the 21. So, in this case, I would say, put the 50 or the 200 on your chart. Watch for levels where we get close to those and bounce, or where we get close to those and, and we don't break above, because those are important. Okay. So just to put this in perspective, we're above, or price action is above the 9-day moving average and the 21-day moving average majority of time. Across the board since May, right, since the beginning of May, you see multiple touches on the EMA, multiple touches on the EMA all the way up, right? So the EMAs are bullish. They're diverging to the upside. They're bullish, right? They're pointing upwards. But the EMAs are also a strong indicator of where price is going to go. And they're also a strong indicator here that price is staying above the EMAs, meaning price is bullish. When the EMAs are, let's say, down in a downtrend, let's say if we look at the VIX, right? If we look at the VIX from, these times, when the EMAs are in a downtrend, that's a indicator of, or an indication of bearish momentum. Okay. So once again, if something keeps getting rejected by the EMAs, you could say, yes, it's bearish. If something is breaking above the EMAs or holding above the EMAs, it's very clearly bullish. Right. I'm going to pick up another chart right now. Let me just see what I've got in my Yahoo Finance. I think Chipotle might be a good one because they just had earnings. But again, I use Yahoo Finance, I use CNBC, I use Bloomberg, same way I did a few years ago, but I also incorporated some technical analysis in there now. All right, Cheesecake Factory is also down. So we can actually look at Cheesecake Factory, okay? Everyone knows Cheesecake Factory, very famous restaurant. This is a great example, actually. So from April, May till July, it was very bullish. Price was above all the EMAs, price was up there, price was pushing higher, a lot more green candles than red candles. Between July and now October, price has been very bearish when we identify the trend, okay? We can look at this and we can say to ourselves, okay, a lot more red candles, right? If you just look at this section itself, you look at this section itself, a lot more red candles, than green candles, very clearly bearish. Two, it's below all the EMAs. It's below the 50 EMA. It's below the price was below the 9 EMA and price was below the 21 EMA. Very clearly bearish. Now, here's some consolidation. It tried to break above, it got rejected. And then last couple of weeks in October, we finally did break above the 9. We broke above the 21 and we started to trend towards the 50. Now, what happened here at the 50 is exactly what I talked about 2-3 minutes ago when I said the 50 and the 200 are very strong indicators due to the large batch of data. Now, here we got rejected at the 200, this is the 50, yeah, the red line is the 50 EMA. We got rejected at the 50 EMA and sold off heavily. Now, a lot of people in my Discord, admins, professors say the news is in the charts, right? The news is in the charts is what they like to say. So they don't focus too much on fundamentals, they focus on the technicals. This is a very clear example of the news is in the charts. So technically, go back to Yahoo Finance. Technically, right, Cheesecake Factory had a really bad earnings and sold off 7%, okay? Now, it nosedived, obviously, and guess what? What happened to the chart? We got rejected at the 50 EMA and sold off. So in this case, yeah, you look at it and you say, yeah, the news is in the chart. We tried to break above the 9-day EMA many times. We got rejected. We finally broke above for a couple of days. We got to the 50 EMA and once, twice, 3 times, 4 times, it closed below the 50 EMA and sold off. Remember, for the red candles, the lower body is where it closed, right? So it closed here, it closed here. Anyway, we got rejected and sold off. So people will say, yeah, the earnings was bad. That's why it sold off. But not only that, it was struggling to break above the EMAs. And every time it tried to, it just sold off further. This was a clear example of the news being in the charts. So yeah, you need to know that those are the kind of times when you can play puts. If you're a beginner, I wouldn't advise that you play puts. Of course not. It can be tough, especially with earnings. It can go either way. With a good earnings, it can go down. With a great earnings, it can still go down. So yeah, I wouldn't recommend you play earnings, but I'm just saying in general, you can still play puts just based off rejections of EMAs, that sort of stuff. Okay, and then let's talk about Cheesecake Factory because Chipotle, because I did just mention that before Cheesecake Factory. So Chipotle is on my watch list as well. I probably will be looking at getting long-term shares in Chipotle soon enough. This might actually be a great opportunity right now near the lows. But Chipotle is down 15.17%, right? They just had earnings as well. Obviously, earnings wasn't that great. Well, 7.5% revenue growth year over year. Usually you want a double-digit revenue growth. But yeah, they said they had lowered sales guidance, so the guidance wasn't that great. 3 things, I don't want to get into fundamentals too much, but 3 things that you want to look out for earnings is revenue, how much companies bring in, EPS, which is earnings per share, and then guidance. Those are the 3 main things you want to focus on with earnings. Chipotle's guidance wasn't that great. Earnings wasn't bad. Like I said, usually I like when companies report double-digit growth. Chipotle only did a 7.5. And then, yeah, guidance wasn't great, so the stock tanked, right? So if I add extended hours on right now, so we can see after hours, there you go. You see the candle right there, right? Crazy. So let me just go back to regular trading hours. Let's pretend that hasn't yet happened. Here, I want to identify a couple of things for you guys. First of all, the def cross, the lower time frame moving average crossed below the higher time frame moving average. That's a bearish indicator. So here, the green is the 9, right? The green is the lowest indicator here. It's 9. Crossed below the 21 right here. Crossed below 21 right here. And it crossed again below the 50 right here. Okay? And then 21, the orange line is crossing below the 200 right there. Another def cross. So you're getting multiple def crosses off the EMAs. Very bearish indicator. Once we, see price action over the next couple of days, you'll see that orange line continue down because it's an average, right, of the previous amount of days. And yeah, now you see Chipotle just selling off. And of course, once again, it's a good idea to start looking at higher time frames, finding levels of support so we can see where can Chipotle maybe bounce, right? We already know it's broken below this level, right? We know it's broken below that level. So we're going to have to find, where the next level is. And I think this is the lowest Chipotle has been in years. So if I go to the weekly chart and I scroll left, right? So since 2023, we haven't been at this level. Back early 2023. So now, because I see this here, look, we pumped, sold off, pumped, sold off. I can draw a level of resistance right here, right? Right here, maybe bring it down a little bit. And that could be another level of support for tomorrow, right? Chipotle might open up lower than this. It might recover a little bit. Who knows? But at least I have some levels drawn now so I can be prepared, right? So this is very bearish, clearly very bearish, right? And realistically, some might look at this and they go to the lower time frame, the daily chart, for example, and they might say to themselves, well, I might draw a trend line. And say to myself, well, Chipotle, let's see. I might draw a trend line like this. Oh, that's not what I want to do. I might draw a trend line like this. I might draw a trend line like this, right? Because it started to trend up. I might draw a trend line like this. Can you guys see what I'm trying to do here? Right? And with this, what I'm doing is you see the price action hit this, came down, hit this, came down, right? If I move it down a little bit, right? And I might draw a trend line like this because it came to this level, bounce, came to this level, bounce, came to this level, bounce. So support and resistance can also be worked into trend lines, let's say. Support and resistance are just flat horizontal lines. Trend lines might be diagonal, they might be this way, that way. But the most important thing here is that I've drawn trend lines and I've shown you, oh, wait, Chipotle was kind of trending in a trend line before selling off. Now it's going to break the trend line. It's going to break the level of support. It's really going to sell off like crazy. Okay. Once again, I want you guys to drop a like if you guys are enjoying this video. Hopefully it's insightful. It is a beginner video. It is something I'm doing on my little vacation. So I hope you guys are enjoying it. And yeah, once again, most importantly, you are going to learn this with practice. You're going to learn this, as you spend more years in the markets. Drawing trend lines, drawing support and resistance, figuring out, how to buy low and sell high, the typical phrase everyone uses. It's gonna come after you practice, right? And then I would say another thing you want to do for technical analysis is just understand, maybe some patterns. Me and my group talked earlier, and there's an inverse head and shoulders here on Meta, right? Here's a shoulder, here's the head, right? Inverse head and shoulders. I'd also say try and figure out how you can recognize double bottoms, double tops. A double bottom is when you see a price action. Let's see if I can find one anywhere nearby, maybe on the lower time frames. You understand this kind of stuff when you tap into the Japanese candlestick Bible. But yeah, double bottom, not really seeing any. I've seen a double top here. Here's a double top. Here's an example of a double top, right? We hit this level once, came back, hit that same level twice, bounced. It's like a W. Okay, if I was to map this out for you, it's like a W, right? W, down. Okay, that's one pattern. A double bottom, on the other hand, would be like this. Let's say price hit this level and it bounced, and then it came up and it came down again to that same level and then bounced. That's a double bottom. And then you've got many different patterns. Honestly, you've got triple tops, you've got head and shoulders, you've got tweezer tops. There's a lot of different candlestick patterns which you'll start to recognize. And I think the most important thing again is just going through, studying different things, right? You're going to learn what an evening star is, a morning star. If I show you guys a doji, you should be able to identify a doji if you know anything about candlesticks. Right here is back-to-back dojis right here. Doji is pretty much an indecision candle, meaning that it pushed the price all the way up and then all the way down, and it closed near where it opened. So this 5-minute candle, it closed near where it opened in that 5-minute period. That's a doji right there. Okay. And there's going to be hammer candles. There's going to be shooting stars, like I said, evening stars, morning stars. If I can see a hammer candle anywhere. Let me see. Not seeing anything clear. This is an inverted hammer candle, and then this is a hammer candle right next to it, right? So let's just focus on these two. Inverted hammer, hammer candle, right? This looks like a hammer, right? Large body and then a longer wick. So, if you learn how to read candlestick price action as well, it helps you just kind of figure out, if a stock is about to drop, smaller time frame, it will be, the 5 minute, 15 minutes, the stock is about to drop. And in larger time frames, you might see a specific pattern, specific candlestick patterns. Even if it's just something like on a weekly time frame. Say we saw an engulfing candle, right? I'm trying to think, maybe RGTI. Nah, I'm trying to think of a stock that had an engulfing candle recently. BBAI. Here's an engulfing candle right here, right? The high and the lows of the week was higher than the highs and lows of the previous week. Engulfing candle, and it continued a little bit higher the next week, right? That's an engulfing candle. That's a bullish engulfing candle. When one candle, eats up the whole price action of the previous candle, that's bullish. And if it happens like this, then you can expect the stock to push up a little bit. Sometimes you'll see the stock really fly, kickstart, and just shoot out. Here's an inverted hammer candle, right? See the body is down here and the wick's up here. But yeah, like I said, I don't want to get too much into the candlestick patterns. That's, I think, something for you to research with the Japanese Candlestick Bible. I think that would definitely help you. Just being able to spot, flags, being able to spot, like I said, the different candlestick patterns is gonna be really important for you, right? And again, we can go to many different charts and just plot, support and resistance like this, right? Here's a level of resistance on the weekly time frame. But yeah, hopefully that did help you guys. I think a lot of people will find their strengths, weaknesses in different kind of technical analysis. You might be great at finding patterns, but less at reading specific candlestick patterns. You might be great at using the EMAs, but not really read overall price action in different ways. But yeah, I think the more you study, the more you try and learn with different market conditions, you're going to be able to spot common patterns, be able to do a lot more in the markets. And hopefully, like I said, you guys did enjoy this video. Once again, if you did, please drop a thumbs up. Make sure to follow on the Instagram, the TikTok, the Twitter as well. And of course, join the Discord. We're having a lot of fun in there, making our money, doing our thing, and learning every single day. So that's it from me. Thanks a lot for watching. I got into making, you got into making. See you guys next time for another video. Peace.